This presentation is called Keeping Up with Run Specialty in 2025. It's Coleman Conley with Upper Quadrant. They're a data collecting company and had some very interesting data on shoe trends. So I hope you enjoy it.
Who's made it in. So my name's Coleman Conley. Thank you all for joining today. I hope this will be informative for everybody. We're going to talk about Run Specialty, where we are today. We're going to talk about where we're going in the future as well. Before we get started on that, I do want to take a quick poll for those of you who are retailers. How many of you have owned your store or been working at your store for about 2 years or less? So you're very new to the industry. 1, 2, a couple. Okay. 5 years? A couple of those. 10 years? More than that? You've been around for a real long time? Very good. Congratulations. So there's a good variety around here, especially in here, of retailers of all sorts of different times that have seen all sorts of different perspectives. And that's going to be really important when we look at how Run Specialty has changed. And today, if I were to start out with where we are as an industry and the prevailing wisdom, I would say that to sum it all up, it starts and feels about like this. By that I mean there are a lot of really good things going on in the running specialty community right now and in the industry. A lot of very, very good things. And yet it doesn't always feel that way. Sometimes it feels a little uneasy for us, especially on the retailer side. It doesn't feel quite so rosy. So, is it half empty? Is it half full? Why does it feel that way? Let's start with this. This is Run Specialty growth and change year over year for the last 2 years, really 24 months. And you don't have to spend a whole lot of time looking at this chart. For now, just focus on, that's the 0% line. Everything with one exception is above it. That means we're growing, right? Very positive news. For the last 24 months, there's only been one blip in a trend that says that we have grown every single month compared to the year before it. And actually, if you were to go back and look at all of 2022, it would be exactly the same. So we have been growing for a very long time. And that consistent growth is very positive. When you put it all together, you see that if you compare the total dollars that were spent in Run Specialty in 2022, compare that to 2024, and where we are year to date, where we're trending, we're looking at about 20% of an increase in total sales volume that's come through in just that 2-3 year period. That's great. That means that we are truly growing as an industry. And yet, we put this out in benchmarks every week. It comes through, if you're an RIA member, you get this email and it tells you everything you need to know. I get emails sometimes that say, hey, I don't believe that. I don't think we're up as much as you say we are, because it doesn't seem that way to me. Are your numbers wrong? Is your data inaccurate? And I want to say, to start, no, there's no reason to think that our data is wholly inaccurate because we're getting it directly from the retailers. In fact, it's matching largely what retailers have predicted according to RIA surveys. However, sure, there's always a 1 or 2% margin of error that's true in everything, but there's nothing that's completely way off or anything like that. But anytime something that is actually happening in the world doesn't match what your eye is telling you is actually happening, that means something. And it means something to me in how I interpret it. So when we think about that, when we think about what's happened over the last couple of years, it really starts here. In the words of the great Yogi Berra, a nickel ain't worth a dime anymore. If you looked at 2022 compared to 2024, it takes $1.07 to be equal to $1 just 2 years ago. Inflation, as we know it, we've heard that story a billion times. Is all of our increase in growth due to inflation? Well, no, obviously, because we're up 19% in 2 years and not 7%. But it does mean that some of that growth that you're feeling on the revenue side is not translating to profit, because it takes a certain amount just to keep spinning at the same point on that hamster wheel. So that's at that 7% point. And when we're talking about the dollars that we're seeing, in that inflation. That growth that you're feeling in your stores is outpacing the inflation. Question is, how long is that going to keep up? And that's where I'd like to go back to this graph. What this is showing you is monthly change in run specialty revenue compared to the previous year, again. But I've added in a 10% line. And I want you to focus specifically on before and after January of this year. Before 2024, we were pretty consistently hitting double-digit growth every month. Since then, we're high single digits, with very recently another double-digit growth month. That means something, because on one hand, it's very difficult to have double-digit growth forever and ever, over and over and over again. But it does mean that if we're still seeing growth, just at a lower rate, it means that there's probably something going on that's changing that a little bit as well that we need to notice. Reminds me of this crack in my windshield. It's in the upper right corner. There is really no reason for me to worry about it today. I can drive just fine. It doesn't affect my vision. It doesn't affect my driving. It doesn't affect anything. And unless a rock pops up on my windshield as I'm driving down the interstate, I could probably keep driving like this for a really long time. But eventually I'm going to have to address it. I'm going to have to work. And that, I think, is what we're running into as an industry. And that's why, even though we're seeing that explosive growth, we still don't feel maybe as good about it as we feel like we should. And as we dig further in today, we're not going to see any 501 fires or anything like that. But we are going to see some issues that if we don't start working on them, continue to go after them, that they are going to cause some issues within the industry. So that means we have to ask two questions. One, what has not changed? And two, what is changing? A lot of people blow right past the what has not changed question, but it is very important, because if a lot of things are seeing variability, then it's important for us to know what stayed the same during that time and what may be pretty difficult for us to impact. So let's start with that. The first things that we see that have not changed much are benchmarks. Not all of them, mind you, but some of the more popular benchmarks that you track as a store. The average units, the total dollars sold on a given ticket, and the returns percentage. 2.3 units, $131, $132, something like that on average, and about 9% of returns are coming back. It's going to go higher in January because it always does, and then February it'll fall back down because all the Christmas returns have happened. That stayed about the same. We've seen it also on the customer side. We're gathering email capture rate of about 61%. That stayed about the same for the last couple of years. We're selling to a few more women than we are to men. That's been about the same. And our online sales, despite the craziness of 2020, still making up about 5% of total sales for our retailers. That hasn't changed. What else hasn't changed? The top shoe styles that are actually sold in your store. Here's a list of the top 15. I would be willing to bet that the top 5 are probably exactly the same in almost everyone's stores. And probably 13 of the 15 or so are going to be within your top 15 as well, your top 15 sellers. Maybe in a different order, maybe with different percentages, but the point is, your top 15 shoes are probably going to make up about 3/4 of all the sales that you see. For those of you coming in, I know it's easier to see on that side than it is far in this corner, so feel free to move around as you need to. Overall, these shoe styles have stayed pretty much the same. Pretty much the same. There have been a couple changes. The Ghost Max is new, Cloud Runner is relatively new. These things have changed a little bit, but they've stayed about the same. What else hasn't changed? The size curve of the American population or worldwide population probably will not change for another 1 million or 2 million years. However, I'll put an asterisk on this one, because it's important to notice our buying habits as well when it comes to the size curve, because that hasn't changed a whole lot. Let's talk about weeks on hand for a minute. ideally, if we were to look at the weeks on hand for all the sizes that you stock, ideally that would be about the same across the board. Because in terms of the amount of sales that you have for each of those sizes, you're stocking enough to keep them at the same point in inventory at any time when people are coming in, but not have too much. What does it actually look like? The exact opposite of the size curve. That means that when adjusted for sales, we are actually buying more of the things that will never sell and less of the things that always sell, when adjusted for the sales. That's an important thing to notice as a buyer, as a manager, as an owner of a store, that there is room for improvement on the inventory side of things. Because this study came out not long ago that said that 2/3 of customers will find somewhere else to go if you're out of stock. Maybe for color, maybe for size, could be for any number of reasons. But the point is, 2/3 of customers will probably go somewhere else if you don't have their shoe in stock. Financially, what that means for you, yes, there is the dollar perspective, but even more so, there's the community perspective. How many people in this room started or work at a running store because you thought, this is the way that I am going to become filthy rich? I don't see any. That's about what I expected. The truth is that, yes, finances matter in the running industry, but not to the degree it does for a Walmart or an Amazon or anything like that. It's a lot more about the community connection. That's what makes the industry so special. So that extra inventory that's taking up room in your back room is tying up dollars. That means fewer community events, less money to spend on your staff, who are your best advocates in their community. So it really does have a real cost even beyond that individual sale to the customer. Talking about this stock issue leads us to the next part. Going from what has changed or what has not changed to what is changing, actively and in the future. And I think there are three main places that we see that change. One is in the variety of products. Two is in the relationship between a retailer and a vendor. And third, the habits of the customers that you're seeing. Let's start first with the variety of the customers, or the variety of the products for the customer. In some ways, yes, it's changing, but really, front specialty customers are only buying from a couple brands, despite the wide variety that they see on the wall. I think this is true pretty universally at this point, or maybe not universally, but nationally. And here's about what it looks like. If you combine all of the run specialty industry that we have, which we have at UQ Cadence, we're able to pull all this data together, we can see that about half of the running shoe sales right now, nationally, are coming from either Brooks or Hoka, and then there's the other stuff. What that means is, and I want to make sure that this sinks in, is that these are the only two brands with massive market share. If we zoom in, there are only two other brands that have double-digit market share at all, and then there's everybody else. And then there are the Diodoras, the Topos, etc., that follow after that top 10. This is really important because despite the wide variety that you stock and that you put on your wall, the next customer who walks in your door is more likely to ask for and buy a Brooks or a Hoka than they are to buy anything else on the wall, combined. That is a very important thing to notice, and it is a extremely important trend in our industry. If we look at the last couple of years, Hoka and Brooks have been battling it out for who's number one, who's number two for quite some time. Just when we think Hoka has overtaken Brooks, Brooks comes back. Just when we think that Brooks is back, Hoka takes it back. And it has been going on like that for a while. But despite it all, these two brands are the only two brands that have what we call a loyalty rate above 50%. They're both about 55, 56%. Which is to say, if a customer comes in today and they buy a Brooks shoe, When they come back next time, there's a 55% chance that they're going to buy another Brooks shoe. All other brands, it is less than 50%. It doesn't fall off a cliff. It doesn't go to like 20 or 30 or anything like that. But these are the only two brands that are more likely to see the same customer buy the same brand shoe than they are to try something different. It's not limited to footwear, by the way. If you were looking at socks, according to Cadence, about half of the sock sales are coming from features. And insoles, about half of the insole sales are coming from Curex. There are other players out there for sure, but it is consolidated at the top. And that's what leads a lot of people to ask this question. Don't we call ourselves Run Specialty? Don't we do something special, something different? And does this threaten all of that? Because isn't it best when there's the ebb and flow of products and that nice little balance that makes everything easy? Makes it easier to sell to different customers. I don't think it's as bad as it seems. I really don't, and here's why. How many of you remember this? Excellent. This is the first Hoka Clifton. Not even the first Hoka shoe that I remember seeing, but the first Hoka Clifton. I remember the first Hoka that came into the store, and I remember thinking it was the ugliest shoe I had ever seen in my entire life. Am I alone in that, or are there other? Okay, all right, good. Whew. All right. There's no way this is catching on. This looks ridiculous. We have Brooks, we have New Balance, we have Asics. What are these people doing? Turns out, joke's on me, right? Here we are over a decade later, I'm buying their products, and according to Google, it's more common for people to search for Hoka than it is for them to search for Yeezy. These things are fashionable. They don't look like that, but they are fashionable. I'm picking on Hoka because it's a really good example. They didn't exist, at least not as we knew it, 20 years ago, maybe even 10 years ago. Curex, Features, both founded right in the very early 2000s. They really didn't exist 20 years ago. I guess they did on paper. The reason these brands grew is because of Run Specialty. It's because the brands put forward something that was new, something that was innovative, something that was fresh. The retailers said, hey, we're not just gonna put it on the wall, we're going to make sure that this gets on people's feet. We're going to be able to test it out, and you will win or lose based on who has the best product. Did it happen overnight? No. But overall, the success of these brands, like the Hokas, the Curexes, and the Features, is something that both brands and retailers should be proud of for the collaboration that they brought together. Because everyone won. The customer won, the retailer won, the brand won. Everyone was happy with that. My question is this. Yes, sure, there is consolidation at the top, no doubt. But how long will it be before there is change in that status quo again? It won't be tomorrow. Probably won't be 1 year from now. But if you look 5 to 10 years from now, there is probably a Hoka or a Features or a Curex waiting in the wings that we are underestimating right now, myself included. I don't know what it is. I really don't. But I think that what we know about this industry is that it does continue to change, that it will always continue to change. And in many ways, we've been here before. Since we're talking about Hoka, since we're talking about things that have changed and the number of brands shifting down in number of variety, there are some things that have increased in variety, and that's color. Don't know if all of you got a handout when you walked in. If not, we have plenty as you head out. We can make sure that you do. But this was featured on the handout. If you looked at the popular colors in 2022, blues, number 1, black's not far behind, everything else, it's another color. Today, it's been 2 years, black is running away with number 1, and there's pretty much a 3-way tie for number 2. That makes it very difficult for you to stock your back room. But it also means that there's been a huge change in the variety that the customer expects, that they expect to see in your stores and that they expect to buy. Now, granted, this is not all black and all white versus all blue and things like that. These are the primary colors of the shoe. So it's a little bit simplified, but still, it has changed dramatically over the years. I remember seeing notes from stores on the RIA website about this as well. And I captured a few of them here, talking about how a customer who's spending an amount of money on a shoe that is the average price these days probably expects to get exactly what they were expecting when they walked in the door. There are things about how we are having trouble stocking that inventory, how special orders have increased. And ultimately, what I have at the very bottom there, that we unfortunately don't have access to the entire line of products that is available on DTC or vendor websites. I don't have an answer for that, but I did collect some of the strategies that were in that thread and also others that I've gathered from talking to other retailers. How do you handle all the different colors that are out there? Well, option A is the swap in, swap out mindset. Like having some different colors at different times, you can create in that customer's mind the idea that fresh things are coming in at all times. So maybe they're willing to take a chance on a different color than they were originally expecting because things are changing so much. There's the shift in mindset to, I'm just going to make sure that I can locate and deliver this to my customer as fast as possible, whether that's drop ship, whether it's pulling it in from a different store of mine, whatever it may be, I'm going to do what I can to make sure that the customer gets their shoe. It may be auditing your special orders. There's only so much that can be done if the special order was something that you simply cannot carry, but we did talk about how weeks on hand by size is largely off. There is some auditing that can be done there. The last idea is one that I think is an interesting concept, and that is instead of making sure that you buy all the different colors for the top selling shoes, what if you were to make sure that you bought a couple of those colors in the top selling shoe and then had your other smaller brands in some of these other colors that you're noticing people are interested in those popular selling shoes. That way, someone walks in, hey, I want a Brooks glycerin in all black. I don't have a Brooks glycerin in all black in a size 12, but I do have a New Balance 1080 in a size 12. Very similar shoe, I bet you'll probably like it, why don't you try it on? It allows you to shift that mindset a little bit with the customer, get them to try something else that's different. I don't think it's a novel idea, but it does allow you to flex that customer issue when it comes to wanting all those different colors that you may not be able to otherwise. That leads us to our next topic. Retailer and vendor relationships. They're more difficult than they used to be. It's not a stretch to say that retailers and brands have not been on the same page lately. When I talk to retailers, they say, I'm just a small store, so it's sometimes really hard to get the support that I need from my reps from all these brands because they don't see me as one of their big accounts. Well, then I go talk to the brands, and as long as they're not one of the very largest brands that we were talking about, they will probably say, I'm just a small brand compared to some of these others. I have a real difficulty getting in contact with the retailer. Truth is probably somewhere in the middle because that's the way everything in the world is. But the point is that there is a difference in opinion and a difference in how the message is coming through. People aren't talking on the same wavelength. Meanwhile, in the back of everyone's mind is this elephant in the room of DTC, which I've already brought up a couple times, and I did make sure that I have a little explicit material sticker on there because I know that is about how we all feel about it. DTC is a challenge. I don't have an answer for DTC, but it is there, it is happening. And it's caused the relationship between store and the rep to be rockier and less collaborative than it used to be. I think that's a real shame. Because when I look at how a rep makes money and how a store makes money, they're exactly the same. The rep has no incentive for something to be sold DTC from the website. Otherwise, they would not have a job. The rep and the store are on the same team. They both want as many shoes to be sold by your store as possible. And I know that the reps specifically are very interested in helping the retailers. They say that they are every time I meet with them at conferences or at meetings and things like that. But more than that, because we have data in UQ Cadence, we can put some actual data on exactly how excited they are to help your stores. So let's talk about that. UQ Cadence, if you're unfamiliar, is a data sharing platform. We make it easy to send your inventory and your sales directly to your sales reps. That way, if they're proactive, they can manage your inventory for you. Or in some ways, maybe not exactly for you, but help you along the way in a way that they couldn't have before. And if we look at the usage from sales reps over the last year, it has absolutely boomed because of the challenges in the supply chain today. Compared to last year, the usage of UQ Cadence by sales reps is almost doubled. They're viewing reports about retailers 173 times per day to look at your inventory, to look at your sales and things like that. All of which is expressly agreed to. There's nothing fishy going on here. They're doing this because they want to make sure that your back room is stocked and that you have exactly what you need to sell. Why has there been such an increase in this? I think it's because we make it very easy for the sales rep to use. Because this says nothing about how long they may spend on the page once they open it. The way that we've set up reports is that you select retailer A, you do your little review, make a few notes, then you can move on to retailer B. So you could spend 30 minutes in one view very easily going through all of your accounts as a rep. But what's important here is the ability that the sales reps have to actually make decisions and use the data once they get it. As an example here, what I've listed is going through a quick review. Here are a small listing of the over 30 that I found in a quick Google, or not Google, a quick query in our database, looking for all women's glycerin 21s in a certain color. You'll notice that some colors are wrong. Some are called different things. Some start with a W, some end with a W. There are all of these different things. And if the data is not standardized, if the data isn't cleaned up, the rep can't do anything with that. If it's not combined into a way that is usable for the rep, there's nothing that can be done without spending a significant amount of time putting all of this together. So on our team, as an example, we have Shelly. I don't know how many of you have met Shelly before. That is her full-time job, 40 hours a week, cleaning up the different types of shoe data. And this is just one specific shoe, right? One women's shoe. So they would have to do that for all of their entire lineup over and over and over again for all of the different retailers. My point is this, that takes a lot of time to put together. And it is an issue that is pretty unique to run specialty, actually. I've worked in other industries. I've seen how other catalogs are kept. Running specialty specifically tends to have some of the least clean data that's out there. Don't want to spend too much time on this, but I know that there have been a lot of discussions recently on possible ways to share data. And given that data sharing is increasing so much over the last 2 years, and I expect it to continue to increase even more over the next couple of years as well, I think it's important for everyone to know exactly what goes on to make that data sharing happen. There is time, there is a team, and there is a large investment to make sure that it all comes together. So once you consider the time that it takes to clean up the data, the time it takes to actually analyze the data that is combined and put it in an actionable form. Once you consider the data security that's required to put all this together, the time to build a platform and keep it up to date, from database experts, from people who are software engineers, and people like Shelley to provide help and support to both retailers and brands. Retailers get benchmarks. That's the thing that we heard from retailers. Hey, this is what we really need to help us. We provide that through the RIA, and we still support retailers who have questions. Anytime you email, Shelley is right there to answer those questions, just like we have support for the brand side. So there is a lot that's going on there. Finally, you have the investment side. Once you consider the data storage, putting together a staff of coders to make sure that it all works, from the security, from the data side, to actually coding it all up. Once you consider all those costs, you're talking about some very, very slim margins when it comes to data sharing. So I think that's very important to know because, like I said, it is a very important topic. But ultimately, it is a very large investment to take data from POS system, unclean, to something that rep and brand can use to help your store. And there is a huge benefit once that happens. I won't talk about that anymore, other than to say, if you have questions, if you're not sure how the data sharing works or things like that, come talk to me. I'm at booth 460. It's written on the sheet. We're over there near Wahoo. We're over near the sock bar. Come by. The only reason I won't be around to answer any questions that I can is because I'm talking to somebody else who got there first. We'd love to be able to talk to you about that because the retailer brand relationship is very important. It is changing, but it is going to have to evolve in a positive way. And I think the data sharing, no matter how it's done, is one of the olive branches that makes that evolution possible. So if you think the collaborative spirit is lost, take a little bit of comfort in the amount of time that we see in our usage stats to say that reps really do want to help you. They are actively trying, and I think over time you'll see more and more of that. That leads us to our final section, which is customer habits. It's not just the purchasing power of the customer that's changed, it's the customer themselves that have changed over the last couple of years. So let's talk about them. Most of these things haven't changed much. They're still runners, they're still middle-aged like me. They're more likely to be female than male, but they're putting in about 10 to 20 miles a week. All that's expected, all that's been the case for quite some time. What is new then is that one piece right there, walkers. That's not an area that we've historically sold a ton to. Yes, they have been our customers. Yes, they have found out about us through a podiatrist or something like that, but it hasn't been someone who has found us on their own and come on in. The good news is we've really embraced that over the last few years. We have been a very open, a very welcoming community to say, hey, we would love to set you up with whatever you need for life, for work, for every day, something that takes care of fit, something that takes care of fashion. It's a nice mix in between the two. We're here for you. And I think that's a great testament to the run specialty industry and to the retailers to say, hey, we're very interested in helping you out. We know our general customer base, and I would suffice it to say that you know the specifics about almost every customer that walks into your door. They've been here before. You know their family dynamic. You know if they have kids. You know roughly their income, what they're up to. You know if they're a runner or a walker. You know what their past purchases are. You would be able to tell me whether they need, more likely, an extra pair of socks, or a Noon, or a Theragun, right? I know those are wildly different things that are not exactly apples to apples, but you would know the specific interests of that customer. question then comes into, does everyone on your team know that? And the answer to that is probably no. If you're the person who helped the customer, you know all of that information. But it's all up here. It's not something that is scalable. It's not something that is kept in the data records that would allow me, a brand new employee off the street, when turnover is high, to walk in and provide that same consistent high-level experience to someone that I haven't met before, but I could tell you what you need to know about them. That scalability is going to be crucial, and that's one of the areas that I think AI, we will see the impacts of. Not because AI is going to replicate that personal touch. I think Steve, who's given the talk over here, would completely agree with me on that. It's not going to replicate that. What it's going to do is allow the scalability, once you have the clean data records on customers, on shoes, on all of those different things, once you have clean data that's been captured in a consistent way, it's going to be able to leverage that in a way that a new person, me, is able to walk right up, find the information that I need, and step right in and help the customer at the high level that you would expect anyone to. I think that's going to change. Again, not tomorrow, maybe not this year. 5 to 10 years, don't underestimate it. I think that's something that we should be noticing. So we've talked about our customers. Let's also talk about their habits specifically. The shoe prices are rising, folks. This is not surprising, we all knew that. Back in 2021, we were closing in on $130 per shoe sold specifically. Now the average shoe is selling at about $140 per shoe. Over the last couple of years, it's grown about 3%, not even 7%, so there is still room actually for the shoe price to grow, to hit inflation, if you can believe that. But it has increased, and yet our customers haven't revolted or anything like that. Customers are still coming in. Something's got to give, right? Where does it show up? Here's one place. How often they come into our stores. 2 years ago, we were looking at about 3 purchases every 2 years for customers on average when they come into our stores. The next year it rose a little bit. This year it rose another little bit to where we're looking at about 1 purchase per year. So even though the amount sold is about the same, even though the average units is about the same, they're coming in less often. What are they doing with that? Well, could be a number of things, right? They could be running them into the ground because they're me and they're extra cheap. They could be finding it D2C. They could be finding it elsewhere, and that could be because of color. It could be because of size. It could be for any number of reasons. Regardless, that days between purchases has increased by over 20% over the last couple of years. And it's a really important trend to keep watching to know what's going to happen in the future. What else has changed?
Is that days between shoe purchases, or is that days between store visits in any purchase?
That is a great question, and I'm 90% sure that it is shoe purchases that we are measuring in there, because the way that it would be calculated would be looking at what shoe brand they bought the second time they came in. Very good question. So this is how often they come in to buy shoes. I had to think about it for a second. I got there. Decreased purchasing power is a different way of saying inflation. We're still looking at about 2.3 units sold at $132 on average. How is that possible? Everything else has gone up. Average cost of shoe has gone up. In fact, the average cost of shoe is more than the average ticket, so there's some discounting going on. What gives? One other area that you're seeing it is in socks and insoles. We are seeing the ratio for insoles increasing a little bit, the ratio for socks decreasing a little bit. So they are trading. There is a trade-off between what is that second unit going to be. And when you think about it, one insole in cost is worth about what, 3 or so pairs of socks. Not exactly the same one-to-one there, but you can see it is down more than 1 pair of socks compared to 1 insole unit increase. If you look at the sock to shoe ratio or insole to shoe ratio, they are less dramatic. It's still generally happening about the same, but there is some change. There is some change that reflects this. What I think can be misinterpreted here is that people will leave the session immediately, go out and say, socks are selling less, insoles are selling more. It's actually not true. Socks have actually grown over the last couple of years. Just within the last year, even. It's not massive growth, but in the last year, socks have grown another 3% over where they were 10% up in 2023 compared to 2022. So socks are continuing to grow, just like everything else is continuing to grow. There is a change in cast members. In 2022, OS First was nowhere to be found. Now they are the #3 sock brand across the nation in independent run specialty. So when we talk about things that change, there's something that's changing. So if socks are still growing, that must mean insoles are going through the roof. Guess what? Insoles are going through the roof. Curex has been the main leader in this, but insole sales have grown over 50% compared to 2 years ago. And actually, while Superfeed has stayed about the same in market share, Curex has grown, cutting off some of that from these other smaller groups, but the fact is the pie has grown so much for overall sales of insoles. Pretty much any insole brand is making more revenue dollars today than they were 2 years ago. So that is a change. Which leads us back here, right? I want y'all to remember that it came from this. Whether it's shoes, whether it's insoles, whether it's socks, whether it's Hoka, whether it's Curex, whether it's features. All of these brands that have grown, that have become so dominant, have become that way because they were embraced by the run specialty community. That change is not going away. That's what's going to be consistent about this industry for the years to come, is that there will be more disruptions. We have been here before. And it may seem like when you look really quickly at that glass, is it half full, is it half empty? It may look and be very tempting to say, I don't know, we're in a really rough spot. Well, there are challenges. But I look at it and I see that there is reason for optimism. That yeah, we are going to have to face some challenges head on in the years to come. But when I look back at things like this, and remember that they didn't exist 20 years ago, 10 years ago, the change isn't going to happen tomorrow. But don't underestimate what will happen over the next several years. And if you make decisions for your stores based on that farther future mindset, it will be very helpful. You will be making better decisions because of it. And I think Run Specialty, because of the creativity required, because of the collaborative nature, will emerge stronger over this time as well. It's about time to wrap up.